Hello friends and traders, let's walk through some ES trading order flow 369 way. We have two charts here. On the right side we have contract rotation chart with the profiling tools on it, and then we also have some levels which are posted here for next day. And when we are reaching these critical levels, we have to look on the left side for a typical pattern, which is the compression of value on the one side. We call that a T pattern. T for Tesla, dedicated to his name because we used a lot of energy work from Tesla in the professional sector in this free education domain. We call it T and inverted T shapes of the bar. So what we have located here is a yellow box which is showing the balance point inside each bar, and without any context it means nothing. Actually, this is just a bar where sellers are here, buyers are here, buyers are here, more heavy. How do you trade it? That is the reason we have to have a 3-strike strategy. One, the location. Second, the direction intent. And fourth, or the third, is the setup. And the fourth is doing risk profiling. We'll skip the fourth sector scenarios because that is used by professional. We have to see the commercial versus retail versus option flow and other things. But if you're trading this purely as unhedged ES instrument, we just need to look at some basic 3-strike pattern, right? Location, direction, and the pattern. That's it. So what do we do? So on the right side, I said we have a profiling. There are two profiles facing each other. Don't need to worry about it unless you want to acquire these tools. They are on multichart.net version only. All right. So, and then we have a VWAP. And we have some moving average. That's it. Two moving averages, just to give context to people, because they get scared of seeing which direction market is moving, because there's also cumulative delta going on my second screen. We have like 8 screens in the office for everybody, but anyways, so that's the point. Based on your comfort level, right? You can take heavy contracts, you can hedge it, you can trade options. It should not matter. The main thing is, if you are trading futures, our main purpose is to minimize the stop losses. We're not talking about 1 MES or 1 ES. We're talking about 10, 20, 50, 100 lots. We're talking about large volume. So that is the reason these tools exist in professional domain. The simplified version is called T pattern traps, which is the last stage. All right, so let's get started. We are here on 27th, excited to come to market to trade. Market opened, and in the Euro session we have desk in Switzerland. So we have people trading on all around the clock. So if you are a New York trader, you'll come here sometime, right? So you look at the pattern and you want to go long and short. Once you make up your pattern, and you don't have to really bank on just this, right? Our main story is, if professionals are looking at these things, self-fulfilling prophecy takes place. All right. The inventory busts, we call that. We call it IB busted, IB busted. What is going on? It's not that they're looking for inventory. They're looking for inventory. They are inventory hunters. Okay, and when you see the most of the retail market is short, they will trap those people and take it on the other side. And it is also the option market. If the whole market is buying puts, the market makers are hedging. They are selling. The banks are selling the puts. 90% people, the trade is put heavy. Let's say 90% of the trading happening at this moment in time is put buying by retail market. That means market makers are selling them. Premium collection. Selling the puts is long bias. But when they sell the put, market can continue to go down. So they hedge it by shorting the stocks or futures. That's why we see panic moves going into the levels. So whatever the reason might be, when we hit those levels of interest, we are going to do something. We're going to look at the left side and see, where is my yellow box? The T shape means the yellow box has to be at the end. If I'm going long, I need to hide behind this box with the lowest risk profile. So if I'm going long, I want this yellow box to be at the bottom, inverted T, and I want some buyer bias inside the box or below the box, and that's it. So right here we have this termination point. If you're going to take this location right here at the level, we have to see market is coming in, market is coming into it is right here. Look on the right side and left side. Value is not jammed yet, not at the level. Precisely when it hits the level, now we're going to act. Now we're looking for this pattern to show up, and you can see here by the virtue of this, right, everything is just bullish here. Why this happened? Because professionals, they are looking at the same thing. This all the value has been jammed on the one side, and you can see they're all hiding behind this yellow box within a point. All right, so 100 point, no problem. 100 contracts, $5,000 risk. What are you looking for? You got the idea, right? So that's what the game is all about, minimizing the risk. Now you see here, this pattern, the T is collapsing on at the level. Then what we have this buyer show up inside the box or just below the value box. The T means they're not two. This is not T because this is right in the center. This is T, one or two levels below this. This is okay, but look at the location, right? So location has to be looked at. And then what the second thing we're looking at is when we have this, when this happens, this is also a trade. It's not a big trade, 3-point trade. Why? We are at the level. We got the T, we got the buyer behind it at inside the box or below this. We're going to take this long. All right, that's it. So what happened? Market rallied up, came back to give you a second chance right here. This is it. All right, next chance came here. Same pattern. Value has been jammed at the bottom of the bar. We have the buyers close to the box or inside the box. The T is at the bottom. This is the T part of the stick. All right, so what do we do? Right, so now if you're going to take long here, we need to see, okay, this guy was, if you look at this guy here, bar previous, this bar is all exhaustion bar. This bar, some buyers were coming. See on this bid and ask, they go left to right, bid and ask, bid and ask, bid and ask. When they saw this, right, this is all pure selling pressure. There's no, at this point, it's all sell only. That's it. Now, what is happening here? All right, so this is the structure of your stop run. Okay, inventory has been collected, and then what they do, they're waiting, they're trying to see if there's more coming. So that is what it is. So this is, if you saw this, if this was below, is interesting. It was okay, but we saw the pattern is changing, so the buyers came in huge. This bar is mostly buyer, but you can, if you just count the buyers and the sellers, total nullification, we have tools to do that. But anyway, just for you in public domain, there we are. There's a little bit of bias tilt if you just count it. 150, like 550, and this is around, so this is like, you know, there's a divergence of 200 buyers showing up more contracts than this, and this one is pure buying only. So this is giving us a hint, this pattern may be coming if they push it. They came and they pushed it at the level and you go long. So this is how you trade the T patterns. Okay, so let's take this area. When we have this value area, we broke through the value and volume. First touch, we always talk about the retest on the other side. Retest on the other side happens on, this was support, which became resistance right here. It was supporting here on the volume. Average, there we go, and it came back, retested on the other side. Now when you're taking a short, you have to see the same thing on the T on the other side. So is there any T on the other side? Market is going up, getting into our levels. So we need to see the T. This is not really a T. This is also not a T. This should be a T, actual T on the top, inverted T on the bottom. So this is the T. Okay. So we have this balance bar, doji bar. If you look at the contracts closely, what do we see here? Let's check it out. You can see here total 5 times differential, almost we can say 900 versus 300, right, of imbalance, right? I'm looking at this color imbalances, not the total imbalance. That this is imbalance, bias is on the short side, sitting right here. That's why you see the top coming here, right? The tail on the top. That's what the reason is. Now you see next one. So we are seeing that we are heading towards attempting to go short, right? So we're looking for a way to hide, easy hide. All right, so this is very interesting. The reason for that is, so look on the left side, we have contracts, initiative, contracts here, blocks of contracts. Market came up, we had a T on the top. Just you can see T means this could be, it should be not more than 1 or 2 values above or below this box. All right, there we go. And we take short bias, and the lean is, you can see here, this is a lean box. You can just lean somewhere here, 1 point. Now if you have to look at, now you have to look into the actual tape. We have to look at actual deep next level, the inside bid ask, right? You can't, and then you can look into this. The orders are getting pulled, orders are getting defended, levels are getting pulled. A little bit of practice, but we got it at the higher level. We got this out. All right. Okay, so came back again, retest on this side. Now let's do see, same thing. Market is watching. Okay, what is this? Look at this. Right, this is good T. Any other T? Let's zoom out a bit. Okay, at this point we are here, and this pattern is coming. This could be some, again, as I said, 2, 3 on the other side. Not a perfect T, not a perfect T, but if you wanted to really take it, again, I need to have some seller show up. The T is here. Next one. Look at this. I'm looking at the color differential, counting this color and this color. These are imbalances happening inside the bar. I can see there were more aggressive selling intent showing up here. And now values are getting stacked horizontally. Horizontal 2 stacks here. There's a lot of patterns here like these, but just giving you one more new pattern here. Horizontal stacks. We have software plugins which just shows all this, right? Multiple 3 stacks, 4 stacks, sideways, vertically, continuous, all those things are there. But you can see there's a continuous stack. This one, you're just watching it, right now, initially. And you're going to take the button. You're going to press the button. You're not ready yet. But here you can see this, okay. This bar, I don't see it. It's almost balanced, right? This is almost a little bit of more bullish, so it went up balanced. This is aggressively unbalanced on the short side. More sellers. Same thing here, right? It's almost balanced. Here, buyers are trying to come in. Now, what is happening here? There's imbalance on the buyer side. Buyers are trying to blow this. Now, they get no support. Okay? That's why you need to not force the trade. You have to be precisely in the T trade, right? So if you miss it, that's fine. I didn't see a perfect pattern, so I skipped it. No problems. Here it is, the next one. Perfect trade. It up, went up, opened, retested it. There we go. 2 tick stop loss. We take a 1 point stop loss, and there we go. Right, 6 points. This is the game of patience. All right. Okay, so that is that. Let's try this today and give it a wrap. You will see this horizontal stacking of value at a very usable levels. But anyway, we are trying to go long. Okay, so we came down, and now let's zoom into this day today. All right, so we are here. Value is above the averages. 2 averages, fast is above the low. Just for your getting some comfort. The main reason it stopped here is the profiling. Okay, this is the profile level. It's retested. This is overlapping profiles. They retested here precisely. All right, you see this facing each other profile. They retested the level. We stopped it on that tracks. We were already expecting that. Now what we are looking for is some initiation on the trade on the other side. So they jammed it aggressively. They came down, right? There's one here too before. Look at this. It came down aggressively. Look at this. Imbalance colors. Imbalance colors. So we are only looking for our pattern that this should be on the lower side, not more than 2 prints below this. I need a buyer shows up. This one looks good. This one looks good. This one is better right here. And off we go. All right, so this is how it is. So it needs quite a bit of practice. It just becomes second nature, just like anything else, just like driving a bike. But I think I gave you the simplest version of order flow, and I think we have given this earlier many times. Now we are back into this level. We'll go up. Now this is moving up and down 10 points, right? Yes. So let's maybe take one last day somewhere. Oops. All right, let's do it here. There's no level here, but let's see if the reactions we are expecting. Now I can go back and check what's going on. But this is double distribution day, and market has made some value on the top. We see a precise doji right here, balance bar. All right, so let's see what's going on. Now you want to take a shot. Now I need to see a T pattern somewhere show up. Here's a T. I don't see any T here. Before that, this has to be, again, if you want to follow the strict rules, right? That means just now this, if you're asking me, I said 2 or 3, right? That's it. Now this is the maximum I will go. Now look on the left side. Look at this, the balance of value. This is the 3 stacked horizontal values. Let me mark this for you if I can. There we go, right? There we go. 3 yellow boxes standing right there. They are all seeing it. Every professional is seeing it. You're not alone. All right. And he's saying, okay, market. Now, if you look at this, overall, this bar and this bar, and this bar, and this bar, and this bar, this is all bullish. What is bullish on the top? This is people who are trying to short, right? And they are just having stop runs. Okay. Whatever name you want to give it, but you can just see there's nothing telling me the sellers are here until I see this one. Now you see this? This bar is pure seller imbalanced bar, T. Okay. What else? Value. Inside the value, big sell order, and they're looking at the stacks. They are going to break this value. All right, that's all there is. Came down, retest one last time, boom. This is going up and down, closed here, opened here. You don't have much time, hide behind here for 1 point. Right, 1 point, that's it. So now to do this 1 point trading, you need to be just doing one thing, right? You cannot just, so you need to know your levels precisely. You need to have multiple screens. So you know your levels where you will be watching this. You can't watch it in the middle, right? This is always coming in and going out. Pure seller control, these 2 bars. You got lucky to got in here, but perfect. Okay, it was too late anyways. So I think imbalance bar accumulation, and that is what becomes cumulative delta. Now this you can have any kind of deltas, right? Bid minus ask total, imbalance, bid minus ask imbalance wise, and then you can have cumulative delta, which is accumulating last 3, 4 bars, 5 bars, just giving you sentimental analysis like a moving average. So that is how you do it. And if you want to really see it in an easy way, order flow, and all day it was bullish. Now this is a cumulative delta. We talked about it. All right. So what you don't have is, let's say, this one. Let's look at this. Let's look at these 2 charts. We have our famous profiling levels. So now at this point, look at the bottom waves. Okay, so now this is 1 second chart. You can have this, you know, because we all love easy things. Mind loves easy things. Now you see this oscillator, it is resting in the middle. It's not showing any power, it can go any way. Market has pulled back. It has pulled back, but right here the order flow chart shifted on the top side. So at this point, this oscillator is not giving us any bias. I'm talking about where my hand is. Okay, order flow is sitting on the sideways action right here. And this is the reason you need to look inside the bar if the sentiment has shifted. If not, you have to wait little differently, because we want that level of precision, or 1 point precision I just showed you. If you want to take it a little bit of easy, breezy scenarios, like shorter contracts, 100 lots, we will not be able to do this way, because 1 year MES or 1 ES, no issues, right? But here it is. Since this is in balance point, this is telling us long is coming, and it comes. And once you catch this long, right, there's no reason to do anything else. If you're scalping on a 9 tick, you can go rotations in so many directions. This, that, right? The true trading progression, I showed you how you can do it. Now this is Heikin-Ashi 6666 contract bars. Nothing else slowing down the system. So you can see the big picture, big waves. And this is order flows, right? You're below the order flow. I want to go shorts only. This is a short only, short only, short only, short only, right? That's it. And market is at the level, is balancing. I'm looking at my other chart, which is telling me, the astrophysics is telling me this is going to be the bottom, which I think you guys probably saw it. You guys saw that. Did you guys see it? Let's see. Right here, right? So this is what I was looking at. This is what we were saying. And then what we have is, once we think we're going to start going and taking longs, now we put for this long here, right? And then probably long here, probably long here, probably long here, long here, long here, right? All of them work. Now, this is very, like, a little bit highly flexible trading, in the sense that, these are pretty larger swings. You better take off if you don't want to do this. Now, what has to happen technically and professionally as you progress, you need to be at these levels and look inside the bar. And you catch these waves at the levels with 1 point stop loss. And you catch these big waves. And that is it. That is all there is to it. All right. In terms of jumping on the other side of professional trading, the mastering order flow come with the patterns. There's so many patterns, but I think the value pattern is value. And why it becomes valuable, professionals and the bankers, they are looking at it. Big players are looking at it. They have a lot more sophisticated. You can spend $50,000 a year, get a lot more sophisticated indicators and indications, but get trained looking at. So to summarize, look at the imbalance between the bid and the ask. Once we have like 200%, 300% imbalance between the bid and the ask, they will color code it. Then focus on the color code counting, which you can just roughly count it. You just see here, no red. It's pure balance, right, on the bullish side, and it went up. And what is happening here at the top? We cannot say this is a stop loss being hunted or it is going initiative. We don't know that. Not from this. How can you say, if I just show you this picture, how can you say that? What is going on? You cannot, right? But we know the public has been trained very effectively that stop loss, put it here, buy here, stop loss is here, right? So they are trained. And it's not their fault. And that's the game behind the game going on. So your best approach is, so now once you get this basics of order flows, VWAPs, direction, levels, what's happening at the levels, and then you can maybe try to have a stop loss and try to catch big waves. Next level is coming into getting into 369 level 1, level 2, and anticipating those levels where this is going to happen before it happens. We are all about seeing the immediate future, right? What is going to happen and with high probability, and we qualify this by sticking with this methodology. Just wanted to thank you so much. Luckily it is 30.12. Remember, we always stop, universe says stop at 369. There it is. Thank you so much.